Hi, everyone. Welcome to Screw the Stock Market. Today, we talked to Rachel Nabers about solo 401ks and checkbook IRAs. What did you think about the show, Aziz?
That was good. It was very informative. I
You were
think one
late.
of the things that I was
All good. I'm messing with
shocking.
you. What'd you think? What'd you
No,
think?
no, I really liked it. It was a good interview. I think one of the biggest problems that a lot of people have is, especially when they're trying to invest in these alternative assets, they're not as easily accessible as the stock market or whatever. And a lot of times you got to have money already to be able to kind of make money in these types of deals. But with an solo 401k or IRA checkbook, you can just tap into the money you already have locked up in there and be able to buy into these things. So it's something that removes barriers, and I think it's been super informative, and it's going to open up a huge pathway to wealth for a lot of people. So I thought it was a great episode.
Yeah, I mean, it's definitely, we haven't done a toolbox episode in a while. And it's, first of all, I'll say, like, it's something I met her because I bought their product. I made my solo 401k through them. And it was easy. It was really easy, and it's exciting to just feel like, wow, okay, all of a sudden, all that money that I have in my TSP from when as a federal employee, which is the solo, which is a 401k equivalent. It was like a decade of money that I've been putting in there, and now it's available for me to invest into the kind of stuff that we talk about on the show, as opposed to having it be stuck in the stock market. So it's exciting. It's she's really charismatic. She's pretty funny, and she really seems to love syndications. So she's a good salesman. She's really fun. Uh, yeah, I hope you guys really enjoy the show and get a lot of value from it. And thanks for tuning in, as always.
Yeah, we appreciate you guys.
Welcome to Screw the Stock Market. On this show, we discuss a variety of alternative asset classes, tools to help you unleash your money, a success mindset, and inspiration to see what's possible when we do things differently.
Hi there. Thank you so much for tuning into the show. We work really hard to create a lot of content that is educational and informative. And we also want to be the best listeners out there. We want to understand what you are interested in, what kind of investor you are, what your objectives are. And so we've created a survey at screwthestockmarket.com/survey. And there you'll be able to take the quick survey, and we'll be in listening, and that'll help us be able to create better content, and we can engage more about how we can help you achieve your goals. So again, screwthestockmarket.com/survey. Hi, everyone. Welcome to Screw the Stock Market. Today we have another special episode. This one is a toolbox episode. It's been a while since we've had one of these. Toolbox episodes are what we do episodes where we're like, hey, invest in this asset class, apartments or self-storage or whatever it might be. And then we have these other episodes, which we call toolboxes, which are about ways of unleashing the capital that you have in new ways. You're working, whatever it is that you're doing, you have something there. And if there's a tool that can help you to become a more powerful investor and to be able to do things that you didn't think were possible, we want to be able to talk about that here on the show. And so I'm really excited to have Rachel Nabers or Nabers? How should I
Nabers.
pronounce it? Nabers. I've only seen it written down. I'm a proud customer of Rachel Nabers. I did my solo 401k through their firm, and I'm really impressed with how streamlined it was. And I just thought I'd reach out and invite you to the show because it's definitely what we want to be talking about on this show. And so we're really excited to have you, Rachel.
Right on. Thanks so much for having me, Alex. I'm excited to dig into it.
So normally we'll get to the technical stuff of the services you provide, but I definitely want to get a chance to get to know you first. If you can tell us a little bit about where you came from, how you got started, and how you ended up doing this.
Yeah. Okay. I'll try to give the short version. I, had a lot of different jobs and different paths on my, first starting out in the working world. But I started getting hooked up with entrepreneurs really early. And a lot of times I would do just like office stuff, administrative assistant stuff for them, started getting into marketing and sales and helping them run the entire organization. And I really fell in love with entrepreneurs, and specifically solopreneurs. There was something that was so incredible about one guy or one girl running this business and creating a life of freedom for themselves. So it's really something that I fell in love with. And then later, I fell in love with my husband, who is the solo401k.com CEO and founder, Jeff Nabers. And we started working together. And Jeff's whole thing is empowering solopreneurs to keep more of what's rightfully yours. So it just became, Alex, this like really awesome puzzle to try to solve of you're a successful entrepreneur, you're probably overpaying on your taxes. How can you use the tax code to your advantage? Don't fall asleep on me, guys. I promise it's more interesting than that. But how can you use the tax code to your advantage to keep more of what's yours? You're the one that's working hard. You're showing up at your business every single day, be it a realtor, you're a software developer, you've got an Etsy store, you've got an Amazon store, you're a consultant, you're a life coach, you're an apartment syndicator, whatever it is that you're doing, and you're showing up and you're working your butt off every day. And then the IRS comes along and goes, yoink, and takes a whole bunch of it. But you're allowed to keep more of what's really yours. So it just became this incredible puzzle that I really fell in love with trying to solve. And I get to help solopreneurs every day along the same way. And I get to invest outside of the stock market, which I'm sure we'll get into as well.
Okay, awesome. No, I love that. I love that. I definitely, it calls to mind the analogy of the gangster, right? Like, just coming in just enough to wet my beak. Like, just you're the little shopkeeper in the village, and then they come and it doesn't feel nice. I know that, yes, it's a public, yes, we're contributing to roads and schools. It's good, but I'd rather keep it for me.
And there's
It's an
ways to
honest thing.
legally keep more. And I think that we are not taught the basics of these finances in our educational system. It's just not taught to us. We're not taught that there are legal ways that we can take tax deductions or bigger tax deductions or tax credits, or how to save aggressively for retirement. Or if you are saving for retirement, how to make sure that you're able to invest in what you want to invest in rather than what like the guy in the stuffy suit and tie in the, office with no air conditioning tells you, oh, I'm going to put you in these 3 mutual funds and just expects you to take it. So there's a lot that we are not taught. And when we are given a little bit of that information, a little bit of that education, we can really flip the script.
That's what we're all about. That's exactly why we are here. So we're so happy. Let's jump into it then. So I'll say my little story, right? I'm a part of a few different communities of entrepreneurs and investors and real estate people. And I said, hey, I'm ready. I've heard about the solo 401k enough. I am ready to get my money out of there and put it into deals and find places to put it where I think I'll do better. And among those came your website. And I said, okay, oh, here we go.
Hey,
Hi,
Aziz.
Hey, sorry to join in, but let's pick up the conversation where we left off.
Okay, so Aziz, meet Rachel. She just told us a little bit about her story, about how she has always been around entrepreneurs, and she eventually married her partner, and I don't know which came first, but they got together, they built this business, and it's all about helping solopreneurs to be able to keep more of the money that they're earning. And so I was telling my story of how I found them. So I essentially got a referral from one of these communities that we're a part of, and they said, hey, this company is the one, go them. They're reasonable, it's fast, it's easy, streamlined. And so I just went to their website, went through the process, and they set me up. And I have my little solo 401k where now I'm in control and I'm able to, and maybe you can tell me even more about it than me, because we'll talk about it. They set it up, and then afterwards there's all these questions. Okay, so I can just do anything I want. And so one of the cool things that they have is they have a community where you can go in and ask, hey, am I allowed to do this? Or what's the procedure for taking the money out? And so that's been really helpful too. So I'll let you talk a little bit more about that. But I just want to say it's been cool. It's been exciting. And now I feel like I'm much more in control of what I do with my money.
I love that, Alex.
That community aspect you mentioned, Alex, is crucial because everyone I talk to is always
Huge.
concerned, what are the rules? What can I do? What can I not do? So if there's already an established network to advise you on that, that's a huge lifesaver for many people.
Oh, majorly. And so we're really fortunate. So you were asking which came first. Did I fall in love with Jeff first? Did I start working with him first? So I fell in love with him first. And then he said, and I was working with other entrepreneurs, and he said, hey, why don't you come and work with me? And I said, okay, we'll take over the world together. Jeff started solo401k.com in 2006. So this is like a little nerd tangent, but just stay with me, guys. I promise it'll get interesting. So the IRS passed this law in July of 2006 called the Pension Protection Act. And it basically allowed you to have these solo 401k plans. And just as a quick overview here, so a solo 401k is really just a normal company retirement plan, but it's for your small business. So if you're a solopreneur, you're a one-man shop, a one-woman shop, then this is a 401k for you specifically. And Jeff was running this solo401k.com. I started working with him after we had fell in love and gotten married and everything like that. And we have this incredible community. There's probably close to 10,000 users on the community and that are in our group. And lots of them are super smart. They might be syndicators like yourselves or real estate investors. They are fintech startup founders. They're consultants. They are attorneys. They're CPAs. And some of our users have been with us for 12 years at this point. Don't make me do math in public. What's 2024 minus 2006? It's a lot of years. So been with us 10, 15 years. And so they have a lot of the experience. So if you're a newbie, it really gives you like a soft, cushy landing to come into a safe place where people are into what you're into. They know that there's a world outside of the traditional vanilla IRA and 401k that your broker has been spoon feeding you. And they know that there's other people that have gone before them. So it's all about helping to guide you in from the finish line. So you can really jump in and go, I'm getting into private lending, mortgage notes, syndications, what do you know? And you'll have tons of people that'll say, I've been where you've been. Here's what I'm doing. Here's best practices.
Awesome.
Okay, so there's the solo 401k. And one of the things that I set mine up with you guys, and it took me a week to realize, oh, wait, I still need to go open up a bank account. So I went into the community and someone said, oh, here's some banks that work with us that are comfortable with this. You set up your bank account first, then you put money in there. And now you have literally a checkbook that you could just go and say, here, I'm investing X amount of dollars in your lemonade stand or whatever it might be. And it's that simple, right?
It really is that straightforward. So I'm a real estate investor myself, and it was really exciting to me. Most of us have probably had what I call vanilla IRAs or vanilla 401ks, and you sign up and they go, okay, what are you? Moderate, aggressive, conservative? Here's 3 mutual funds that reflect your risk. And you're like, great, but I think we all have a feeling that's not real diversification. Or they might be like, no, but we put you in this real estate mutual fund and we put you in this oil and gas ETF. This is diversification. And you're going, yes, but it's all in the stock market. Real diversification means that you have different asset classes, right? Exposure to different asset classes. So if you're into stocks and bonds, awesome. ETFs, great. You can have them in a solo 401k. And we'll talk about a checkbook IRA. I'm sure there's those of you that are like, this is great, but I don't own my own business. I don't have any self-employment activity. What do I do instead? So
and that was going to be my question.
Catch up with you guys. Yes, we're going to catch up with you guys too, because there is a way for you to get control of your money legally. But so let's say you're into stocks, bonds, ETFs. Awesome. Great. If that's your deal, cool. But let's say you also want to invest in real estate. Or you also want to get a little bit into crypto. If you go to your big box brokerage house, they're going to look at you like you have 2 heads. Or they're going to be like, yes, of course, real estate. How about this REIT? Or how about this ETF? And you're like, it's real estate adjacent, but I'm not actually owning the physical property. So there was something that was really intriguing to me. And you'll see this a lot in the community. There's something that's very intriguing to be able to legally hold those different asset classes inside of your IRA and 401k. And what nobody tells you is that type of diversification is where the real growth can happen. And that's how you can actually get to your retirement dream number faster.
So I noticed you already mentioned the checkbook IRA. I did the solo 401k, but I remember that there's a handful of other I don't know if I should call them products or services or something that's available on the website. Could you tell me just a little bit about what's all included in each of those?
Absolutely. So let's go high level first. So the retirement plan structure, if you have your own small business and you don't even need an LLC or anything like that, let's say you're a realtor, you're getting 1099 income. That's what the IRS calls a sole proprietorship. Sole like one, and a proprietor. Think about the old timey Old West, right? You're the proprietor of your shop. So if you are a sole proprietor, that means you've got 1099 income, you're earning self-employment income, you're probably paying a lot of taxes on that, but that means that you qualify for a solo 401k. Again, solo because it's just you in your business. So a quick note on qualification. If you have some sort of self-employment business activity, you're a sole proprietor getting 1099 worker, you've got an LLC, S corp, C corp, partnership maybe with your spouse or someone else, and you don't have any employees in your business other than you and your partners or your spouse, then you can have this solo 401k plan. Now, if you have a giant business with tons of employees, you can't have a solo 401k. You just need a normal corporate 401k, and then you're back to those vanilla options. Or if you don't have any business at all, then you want to check out a checkbook IRA. And one thing that's cool about, you might have heard of a normal IRA or even a self-directed IRA, but those still have a lot of hurdles that you have to jump over and hoops you have to jump through just to get access to your own money. Jeff, our founder, created with attorney Deborah Buchanan back in 2003 this structure, the Checkbook IRA. And what that does is it turns an IRA into a solo 401k. So Alex, you were talking about how you like literally have a checkbook with the bank account for your 401k money. The checkbook IRA is the same thing. So we create this IRA where then you can use those IRA money to invest in stocks, bonds, private notes, mortgage notes, apartment syndications, single family rentals, crypto, private lending, VC funds, angel investments, startups. Pretty much everything you can think of is now accessible to you for both the checkbook IRA and the solo 401k. So I would say those are the two big guys to be aware of. And what I want you guys, the listeners, to really be thinking of is, which bucket do you fall into? Do you have some self-employment business activity? If yes, then the solo 401k is a super powerful retirement account for you to check out. If no, then the checkbook IRA is going to let you get 99% of the way there to a solo 401k, but you don't need to worry about having a business. So if you're out there listening to the show and you're going, I've got IRA money or I've got previous employer 401k money, I want to get into investing in syndications also, maybe like a deal that Alex and Aziz are putting together, but I don't have a business. That's okay. You can still roll over those IRAs, roll over your 401ks into your checkbook IRA, and then you can have control over investing those IRA money into something like a syndication.
And I'd like to re-emphasize into a syndication similar to something that Alex and Aziz would do. Please, we accept all funds.
Exactly. And think about it too, because I know you guys have your limited partners that are listening to the show. You have potential investors that are listening to the show, and you might have other cap raisers that are listening to the show as well. There's so much money that's in retirement plans. Over $30 trillion is in retirement plans. Wow.
Yeah,
just let that sink in.
That's a lot.
It's a lot of money. And I'm sure that a lot of the people who have that money locked up in retirement plans would like to be able to get access to deals like apartment syndications, like real estate, like not having to be limited to just stocks and bonds. And now there's a way that you can.
So let's go through the process for a regular W-2 employee, for example, that wants to take advantage of this. I'm assuming they would go through like maybe the checkbook IRA path since they don't have a business or anything. Now, how would they manage that transfer process if they already have a 401k in place through their employer?
So without getting too nerdy, the difference between a checkbook IRA and a solo 401k. So Alex, you have a solo 401k with us. And what that means is you're allowed to be your own custodian. So you get to choose, where do you want the money held? You were the one that did the rollovers, opened the bank accounts, made contributions, all that good stuff. You're directly in the driver's seat. With a checkbook IRA, by law, you still have to have an IRA custodian in the mix. So, what we do to help actually get the money in your control and not have you have to beg to the IRA custodian every time you want to invest in something is we form a special LLC. And that LLC is wholly owned by your IRA. So it's a single member LLC, and the member is your IRA. There's no tax return for this LLC, okay? So you don't have any extra nonsense or hoops that you have to jump through there. Now, what will happen is we open the IRA, we form the LLC, we handle those transfers so the money ends up in that LLC bank account and you control the LLC bank account. So you end up having access to an LLC bank account, but it's just your IRA money that's in there. And you have a checkbook just like Alex or a debit card. When you find a syndication like your guys that you want to invest in, you literally just wire money from your IRA LLC bank account to the syndication. When you're getting distributions or dividends from the syndicator, then you guys would just wire those funds right back into the IRA LLC bank account. That way, there's no taxes on any of that income. No taxes on any of that income. You guys, that is wild that you can be making these investments. Maybe you have syndications, you're getting quarterly distributions, and you don't have to put that money on your tax return. It goes into a tax deferred structure and it just grows and grows without having to pay taxes on it.
Now, in terms of the way the money would be transferred into that IRA from your 401k, would you just is there a transfer process from the 401k to the IRA, or are you just supposed to just start contributing to that one instead?
You can actually do both. So you can put money directly into an IRA. You can put up to $6,500 per year, $7,500 if you're age 50 or older. And you can do transfers from other IRAs that you have laying around out there, other employer 401ks. It's a very straightforward process, just asking them to send a wire or an ACH into your new IRA.
Okay. So it's a relatively easy and simple process. And you don't have to do
Definitely.
like a
And we
full
walk you
transfer.
through the whole thing. You can do a partial transfer.
So now we've set up our account. Can you tell us a little bit about some success stories you've seen? You're probably in a really great position to see how this has changed things for some folks.
Oh, yeah. There's a couple I can think of right off the bat. So I would say one of the first is one of our clients. I won't say any names just to protect them because, of course, success stories, they've done really well. So the first guy I'm thinking of, he's been with us since 2009, 2010, I believe. And we also have an investor club where we share some information and educational materials with our users. And we first started talking to our users and our club members about investing in Bitcoin in 2016. So this guy started buying Bitcoin. I think it was maybe $400, $500 at the time. And I will just also say that our founder and CEO, Jeff, my husband, he started getting into Bitcoin in 2013 when it was $70. I was kicking and screaming. I did not understand it at the time. I later got in 2015 when it was about $300, put some into my 401k as well. As of today's recording, I think Bitcoin's at, $39,000. So this guy put in a few grand to Bitcoin in 2016. And that has gone up so significantly. It's life-changing money. It's really special. Another case study is a couple that have actually predate me. They started with Jeff in 2006. And they had a really interesting strategy in real estate where they started buying like mineral rights, water rights on properties. And so those were able to cash flow. They didn't have to actually buy the property itself. They were just buying the mineral rights, the water rights. And those have cash flowed 6 and 7 figures for them in the last 15 years that they've been doing this. I think that they were over the 7-figure mark the last time I talked to them. It's like life-changing money. It's really incredible. I've also had some users who have invested in startups, early stage startups. They've invested in various angel funding. And if someone gets in early on into a startup before they have their IPO, before they pop, Peter Thiel did something similar with his own Roth IRA. It really just becomes crazy, like Joe Rogan, Spotify, FU money, right? Just like really life-changing craziness. So, and we see that happen a lot. Those success stories that are very sexy and exciting, what happens even more is someone that got into a good real estate deal that cash flows for them every month and every year over year. Or you get someone into a syndication like what you guys are putting together. And in 3 to 5 years when there's an exit, now they can add $10, $20, $50,000 of gains or more to their retirement plan. And then they can rinse and repeat. So those two types of success stories are out there. There's the big flashy ones that are very sexy, and those are really exciting and they get a lot of news. But the ones that I see even more on a day-to-day basis are people, normal people, just doing investments, thinking outside of the box, and then they're having those successes, and those successes are compounding. So Albert Einstein said that compound interest is the eighth wonder of the world. And here's what I want you guys to put together. There's the only two things in life that are certain are death and taxes. We can't cheat death yet. Maybe when the singularity comes and we all download our consciousness into AI, that will happen. But right now, we can't cheat death. And we're not cheating taxes. So let me be very clear about that. But there are ways to legally reduce what you're paying in taxes by putting money in and save on what you otherwise would have been paying taxes on. It would be a really interesting case study to take a look at two of your LPs, for example, that are getting into one of your syndications. One of them invests with just normal money, taxable money. So you get the quarterly distributions, maybe the cash out at the end after 3 to 5 years after you guys sell the property or properties, depending on how you have it structured. And then they have to pay taxes on all those gains. They've made money. That's wonderful. It's a blessing to have that gains to pay taxes on, but they're paying taxes on it. And then you compare that to someone that did the same deal with you guys, made the same investment, but using their Checkbook IRA or their solo 401k. Those quarterly dividends or distributions that you're giving to your LPs, the cash out at the end, now all that money, no taxes on it. And then they can reinvest it. And that starts to really compound your growth. So those success stories that are just normal people doing normal investments and making a better life for themselves, to me, I think are even more incredible than like the sexy 100 million% gains or whatever.
So your sexy examples are a little bit triggering because 2017, Alex and I got into Bitcoin, and I was going to say,
did you get out in December of 20?
Actually, I'll say it was partially our fault because if we had stayed in Bitcoin, we would have been fine. But then we got bought into the hype from listening to people and transferred from Bitcoin to the altcoins, and we were horribly burned. Horribly.
Yeah.
So crypto.
Is this a family show?
Yeah.
Is this a family show?
Okay,
so they call those shit coins, just so you know.
Yeah.
There's Bitcoins and there's shit coins.
Well,
so
we
not
got
all
all
of
the
them are
shit
bad,
coins.
but a lot of them were. Yeah, a lot of them were in 2017. That's what the ICO boom. And the way that I think about Bitcoin is I think about it very similar to real estate. I think they actually share, and precious metals too. I think there's a lot of crossover in those assets, which is that those are assets that you hold for a longer period of time. Now, this is not a show where we're talking about real estate flipping. That's a totally different mindset. It's a totally different strategy to using real estate. But most of the people that I know that have had success in real estate, it's because they're buying and holding, or they're doing some sort of a forced appreciation play through a syndication where you can buy in, make some, improvements to the property, then sell it at a higher value. But even when you guys are doing a syndication, you're not saying, and in 90 days, everyone's going to have their money back. It doesn't work like that. In the real world, those timing of those cycles, they take longer. And Bitcoin, precious metals, they're the same. So the way I think about it, when I invest in syndications, when I buy Bitcoin, I buy it, I invest it, I know it's my long-term asset. So I just forget about it until the syndicator comes and tells me we're ready to cash out or something like that. And I think that for those of you who are investors, that can be something that really gives you some peace of mind. Trust your syndicator, trust your Bitcoin exchange or your hardware wallet or however you're having it. It's not, if you want to trade, you want to get in and out, that's cool, but that's a trading strategy. That's not the same as investing, okay? Trading, investing are really different. And that's probably my little philosophical tangent there.
No, it was definitely all of our fault in that regard. If we had stayed with Bitcoin, we would have been fine. But the other triggering example was the venture capital startup thing that you also mentioned. Because Alex and I spoke to an individual one time who was a venture capitalist. And we had a very good conversation. At the end, he actually invited us to participate on one of his next deals. He was telling us, Serena Williams is involved, Oprah, Charles Branson, or Richard Branson, not Charles. He's just mentioning all these people and whatnot. And I think he just overestimated where Alex and I are at. We're on our way there, but we're not quite at Serena Williams Oprah level.
Right. So you just write 6, 7 million, just a drop in the bucket. No problem. We'll let you in on the friends and family rate, 5 million. I'll drop it down to you to
pretty
get
much.
in.
That's how it went.
What I
was a
like
great conversation.
about real estate, right? That's what I like about real estate in Bitcoin as well, is I think that there's really an entry level for all different types of investors. So no matter where you are in your investing journey, there is some sort of a real estate structure that can work for you. If you're super, super early on in the game and you only have a few $100, maybe $1,000, then checking out those crowdfunding platforms are really interesting and exciting. Yield Street, Fundrise, stuff like that. If you're a bit more of an established investor and you have the tens of thousands of dollars that you're able to comfortably invest, then syndications are awesome because they are those actively managed investments. And Bitcoin's the same way, right? You have $5, you can buy $5 worth of Bitcoin. You have 500,000, you can buy 500,000 of Bitcoin, depending on your risk tolerance. Disclaimer, not giving financial advice. But the thing that's really exciting is I think that those types of alternative assets, they are designed to have an entry point for all different types of investors. And that's really special these days, because before, back in the day, you had to really already have arrived to be able to invest. And I like that's not the case now.
Yeah, no,
I really love that. I think that's, I was going to say that. I think that's one of the things that we've always explored. Like I always use my example as a realtor, right? Where I'll make a commission and I'll have 10, 15,000 bucks or whatever. And I'll be like, okay, this is great. Now I have, but it's still not really quite enough to go out and buy an apartment building, right? Where I might need millions.
A couple
or it's
million,
not quite
yeah.
enough. Yeah. And so I love that, the idea of discussing these smaller amounts, and even smaller than $10,000, $15,000, you can still do something with it. And I love that. That's one of the things that we've been trying to explore more on the show. And we had our episode on precious metals. We've had a few episodes on crypto, but that's an area that I feel like we haven't covered as much on the show that I'd love to talk more about and explore. It's, hey, you have $500. What are you going to do with it? What's the best thing you can do with it?
Because
there's the other part.
You're getting them excited about investing at all different wealth levels, right? And then if you can be excited about investing, no matter where you're at, no matter what wealth level you're at, right? Now is the time to start. Right? Now is always the right time to start investing. And for those of you where you haven't dipped your toes into alternative assets, maybe it means you buy $100 of the S&P 500. Great, fine. If that's where you are, that's where you are. That's okay. But just starting something, start to make investing and saving a part of your identity, a part of who you are, because that is what sets you aside. And that's what makes you the success story in a year, 5 years, 10 years, 20 years down the road. Is you'll always look back and go, I wish I started sooner. That's something, honestly, Alex, that people tell me about the solo 401k pretty much every day. Why didn't I find you guys sooner? Why didn't I start this 6 months ago? Because even if you're only putting in a little bit at a time, you're creating that compound growth for yourself.
And I think another important factor is, at least from my experience, at least Alex and I's experience, when dealing with people for some of our syndication deals for real estate or whatever, and we're looking for investors, some of the price points sometimes are a little bit daunting. People, you tell them, the entry point, $20,000 or it's $50,000 or whatever. They're like, I don't have that in liquid cash. But a lot of people do have at least that amount in their 401k. Or
exactly.
Yeah, and they can tap into that and now be able to get access to these type of deals that previously were just for the playgrounds of people who are wealthy and have liquid capital that they can just throw around. You can tap into all of that capital you have locked up in your 401k now.
And then, so you're exactly right. And I talk to syndicators all the time and investors who, you're right. They might be like, I don't have 20K. I don't have 50K just sitting in my bank account. You go, do you have an IRA or 401K? We have a couple $100,000 in there, but I can't touch that. And you go, well, yes, you can. And they go, I don't want to pay the taxes on it. You go, you don't have to. You don't have to take the money out of the 401k or the IRA. You don't have to do a taxable distribution. You can legally just roll it over into a checkbook IRA, a solo 401k, and then get into position. And now back to what we were talking about earlier, Aziz, now you have some diversification. So now when you're looking at your portfolio, you're going, I've got this syndication, I have this stock portfolio, maybe I have a little bit of crypto, or I'm doing a little private lending. And then it really starts to be interesting, because if the stock market takes a dump, guess what? It doesn't necessarily have to affect you the same way if not all of your money is in the stock market. And if you need to wait for the real estate syndication, the project, usually the first couple years, it might even be having losses. That's okay. That's by design. And you don't have to worry about that, because now you have these other investments that are tempering it, that are evening things out.
Absolutely. Now, there's two things. I wanted to talk a little bit about limitations, and then of those kind of sexy stories of success. But my question was, the money that's built is still in the IRA, right? It's not accessible to actually change your life today. So
correct. It's meant to be rich old you.
Okay. So that's good. So at least you have the peace of mind of knowing, hey, but you still got to put food on the table today.
There's a reason behind that, right?
That's okay.
So there's a reason behind that. So the IRS says that they're doing this like for our protection or something. So they're basically going, hey, I'm going to let you grow this money and you don't have to pay any taxes on it, but you can't have it yet. You have to wait. And so that's the push me, pull you, right? That's the trade-off with the IRS, is they're allowing all this money to grow without paying any taxes on it. And for my real estate nerds that are in the audience, you don't have to do 1031 exchanges. You don't have to do any of that stuff, because it's all within this tax-deferred structure. But just like you said, Alex, it's because you're not taking the money. You're not trying to live off that money. Now, if you do need to live off that money, you can. You just pay taxes on the distribution. So let's say you have $1 million in your IRA and your 401k. Excellent goal for everyone to have. And you need to take out 20 grand. You're only paying taxes on that 20 grand that you're actually taking out. So you also can dip your toe in and bite off little pieces of the IRA and the 401k over the years and only take out what you need. That way you're in a lower tax bracket. You're only paying taxes on that little bit that you're taking out. And Alex, can I just say one quick thing about a 401k loan?
Sure.
Okay, so this is something that is really exciting for those of you that qualify for a solo 401k. And let's be honest, there might be times when you need access to cash, right? You need access to capital. So a solo 401k has this really cool thing called a participant loan. And what you're allowed to do legally is you can take out 50 grand or 50% of your account value, whichever is less. So if you have 500 grand in there, you're maxed out at 50K, right? If you have 80 grand, you can take 40, 50% or 50,000, whichever is less. That's a tax-free loan from the 401k to you. You have 5 years to pay the loan back, and all of the interest on that loan goes to your 401k. No bank, no middleman, no loan processor. So it's like a little extra bump of getting money into your 401k. So just to touch on what you were saying earlier, Alex, you're right that in most scenarios, the reason why you're growing that money tax-free and the IRS isn't trying to take any of their cut is because you're not accessing it before you're a rich old person. But there are ways with a solo 401k that if you need access to cash, you can still get it and you don't have to take the tax hit.
Can I just say I hate rich old me because he's living the life that I want to live now?
Well, we could talk about that on a different podcast episode, because there are ways to take what Tim Ferriss calls mini retirements. I think that those are really important, and they're definitely something that you can do now. And I also want to say I'm not just like a total zealot for putting all of your money in retirement plans. It's about balance, right? I put money away into savings accounts so I can have rich young me. And then I have money that goes into my solo 401k for rich old me. I do pre-tax contributions. I do Roth contributions. I do stocks and bonds and real estate and crypto and private lending and all of it. I really believe that diversification, both in your strategies, taxable versus tax-free, old versus young, now versus later, that provides us balance.
I love that. And I guess this goes to one of the other limitations. So there's two limitations that I'm aware of. First is, and correct me if I'm wrong, but my understanding is that we're not allowed to invest into our own business or our own deals. So if I want to invest into my own syndication, I can.
Yes, womp, womp, womp. That's the
Mm.
rules from the IRS. I know. The IRS they're fairly lenient as far as what they let us invest in. 20 years ago, people weren't really talking, or I guess 30 years ago at this point, they weren't talking that much about investing your IRA or 401k in real estate. Right now we can. I think it's a lot more in common discussion these days. But you're right. There's certain rules where your IRA and your 401k, they can't invest in your direct business. So one of my little catchphrases is, if your IRA or 401k is in a deal, you aren't. And if you're in a deal, your IRA and your 401k aren't. So what that means is you got to have good deal selection. You need good deal flow. So if you're a GP on a syndication, you're the general partner, then you're not investing your IRA and 401k as an LP. You just got to find another deal that's going to be just as sweet as yours.
Okay. Now, how does that work on a smaller scale? If I want to go buy a single family home for myself to just buy and hold over the long term, I should have inhaled before saying that. How does that work?
Breathing is
That's
hard.
totally fine. Yeah, I know. We'll do a whole nother podcast on respiration later. So, but yeah, basically, buying single family rentals, that's all I did for a really long time was single family rentals. I don't do that as much anymore. Got burned on a couple of properties with not great property managers. Happens to the best of us. We live and we learn. It's totally fine for your checkbook IRA, your solo 401k to buy and hold a single family rental. All of that monthly rental income goes right into your IRA, LLC, or your 401k bank account, not to you. That's how it grows tax-free. But to talk about those limitations and rules, Alex, here's the kicker. You can't live in that property because remember, if your 401k is in a deal, you aren't.
Okay, I like that. So maybe then the difference between, and this might just be getting too nerdy, I'll stop after this question, but the difference might be the fees and the other profits, the other forms of profit that are happening in a syndication, whereas if you own a property outright,
You have
you're
more
not
expenses,
collecting
right? And you
fees.
still are going to
Yeah.
have expenses. So that is where, as an investor, you need to really do diligence. What is the right deal structure for you? What do you feel comfortable investing in? For those of my control freaks out there, I love you. God bless you. You want to control everything. So you want to buy that single family rental. It's all on you. But it's all on you. Okay. So when there's a water heater that breaks, guess what? Your 401k is paying for it. Your IRA is paying for it. Whereas with something like a syndication, you have a lot of those expenses built in to the depreciation what's going to happen in the first couple of years, or the pro forma that you've got for the deal, that you know what your expenses are going to be as far as building up that property. And you also have someone that's actively working on it every day, right? That's what Alex and Aziz do, guys, is they're working on the deal every single day so that you don't have to work on it every day as the investor. All you need to do is wire the funds, write the check, whatever, and then wait for your investor updates. So for those of my investors out there that you have a bit of a busier life, or maybe you're not sure how to do diligence a single family rental properly, you don't know how to look at comps, or is this a good deal? Is it not a good deal? Does a property manager good? Does a property manager suck? If you don't know about that stuff, then something like a syndication where you have people with experience and a good track record is something you should look into. It's worth considering.
Look how tired Alex and I look. That's because we're working hard for you guys every day.
There's so much work that goes into it. And really, LPs, we should be very thankful because this is your job, right? That's the difference, guys. If you're out there listening and if you're nodding your heads, if you are a GP and you're like, yeah, it's a lot of work, it's your job putting together that deal. And then if you're a limited partner, then your job is to be the passive investor. And that's it. That's what your job is. So then you let the GP do their deal and let the GP do their job.
It's so easy being a passive investor. You just put the money down and
I love
forget
it.
about it until you get your cash.
I'm telling you,
The best.
I love it now.
Being the lead on deals is just exhausting.
It is. And hey, look, so Jeff and I run solo401k.com. I'm running a business all day. I can't be running around trying to find financing and raise capital and find the right people to do maintenance and help me overhaul this $1 million apartment building or something. It's a lot of work. So for me to be able to still get on the action on that deal, especially if I can use a retirement plan, which I do, again, I have properties inside and outside of my retirement plan because I might need access to that cash one day. I don't want it all locked up in retirement plans. But there's something that's really freeing about being an LP.
Yeah, yeah. Alex and I just had to spend 2 hours on a call yesterday just going over maintenance, insurance, marketing, this, that, all for one of our other properties. It's just,
It was a
it's
late
a
Totally.
call
lot of
too.
work.
I was tired.
Yeah.
Rachel, I just want to thank you. First of all, you're a great proponent of syndication. So we're going to have you back anytime.
Great.
You're welcome. But just, this is something that I just want everyone in the audience to really think about, right? The other limitation actually connects to this, which is the responsibility that you're going to be taking on your shoulders when you do something like this. If you're used to going to that LP, GP kind of thing, if you're used to being more passive and just letting your financial planner tell you, here's what you're going to invest in, trust me, sit back and relax, it's going to be a little bit of a change. And you might have to overcome some mental blocks like analysis paralysis. You're going to have to learn a lot you're going to have to grow your education about what you're investing in. And you're going to take on a little bit of that extra stress of, should I, shouldn't I? But I think Rachel will agree that you'll probably find over the long term, it's going to be really rewarding. You're going to learn. And as you learn, you're going to get better at it. And as you get better at it, your wealth is going to grow probably much more quickly than it would if you're passive. Because at the end of the day, no one cares about your money as much as you do. And so that's the thing that we talk about on the show a lot.
I agree 100%. And for those of you that are business owners or you have some self-employment activity that are out there, the solo 401k is not going to be that much more work for you. It's just not. You'll find some investments that work for you. Join our community. There's tons of people tossing ideas back and forth about where they like to invest, how they're investing, getting recommendations from one another. But you're already running your business. You're the CEO of your business. So you should be, this is going to sound cheesy, but you should be the CEO of your retirement too. Okay? Stop letting other people be in the driver's seat of your wealth generation. And if you're a 9-to-5er, you're working the W-2, then you still can gather some of those reins of your own wealth building. And you can still be in charge of a lot of your destiny. And it's worth it. And if you're new, go slow, go small. It's okay to do that. Get comfortable. But you're going to look back in a month or a year and 10 years and say, I'm so glad that I started when I did.
Yeah. And I would say for those of you that also want to maintain like the passive side of things and not really have to invest too much effort into doing it, you can still do that. Like our syndications have tons of passive investors. The only hard part is going to be finding those deals. That's where you will actually have to put in a little effort. And just connecting with people like Alex and I or other people that specialize in particular types of alternative investments, that's where you'll be putting your effort into. And as long as you find reputable people, you can just kick back, put your money down, and just wait for the cash to roll back in.
Exactly.
Rachel, is there any last kind of words of wisdom? You shared some great stuff with us. Is there anything else you'd like to share with our audience at this point before we end the show?
Wherever you are, just start. Do something. Your future self is going to thank you. Your future generations, your heirs are going to thank you. Wherever you are is just fine. That's okay. But start. Do something.
I love it. I love it. That's so empowering.
Those future rich bastard versions of ourselves.
Yes. Yes. Rich old us are going to be looking back and laughing on this, going, thank goodness I did something.
Now I'm visualizing the scenes from Looper where the young self went to the future to kill the old self.
Yeah, but we saw it coming all along, so we couldn't get the upper hand. So yes, yeah, that's us. That's all of us.
We got really nerdy there at the end.
Yeah, we did.
Loads of
You're
fun.
welcome, everyone.
Thank you, Rachel. It's really great to meet you.
It's been great.
All right, let me